sounding things about Russia. He said that Russia was a country with a destabilizing behavior, which is of course true, but you know, if you meet the president of a country, this is probably not the kind of wording that you want to apply if you want to be diplomatic and if you want to have friendly terms with the Russian president. So it's very interesting to see what Trump will have to say. It's also very unpredictable. So, of course, there's a lot of speculation on the market, what will be discussed at the G20 summit, especially in terms of global trade, especially in terms of climate change. But nobody can really know what Trump will say and what the discussion will really bring. So I would say all people on the markets, be it, you know, commodities traders, currency traders, equity traders, bond traders, are glued to the screens and to the news tickers, waiting for more statements to come out there in order to potentially translate them into trades.
Quite an unpredictable person, I must say. Of course, we'll all keep our ears open to know what he has to say. Now let's look at the world of auto business. The European Commission has okayed the takeover of Opel by Peugeot. Is this news revving up the shares of automakers across board?
Yes, it is. Some of those car shares are on the upside. Of course, consolidation is always something that makes, you know, at least investors happy and that makes them hope for higher valuations. The most interesting story, I would say, today in terms of cars is about Volkswagen, though. It has to do with football. Media report that after 45 years, Volkswagen might snatch the sponsoring deal, the global sponsoring deal from Daimler for the German Football Association, DFB. Volkswagen is reported to be ready to pay up to 30 million euros for this deal, which would be about 4 times more than Daimler pays yearly at the moment. But of course, I mean, this would be a great thing for Volkswagen to be the sponsor of the German National Football Association. The car maker is in so dire need of good reputation that, you know, this marketing scoop might really be something for the car maker and the money might be well spent.
Well, particularly after the emissions scandal, I guess, Conrad. Anyway, thank you very much for those updates. I hope to see you again tomorrow. We just have one more day to go. So looking forward to talking to you tomorrow. Have a good day. We'll move on now to the U.S., where the stock index futures pointed to a mixed open today as traders awaited a fresh batch of economic data. ADP releases private sector payrolls for June at around 8:15 a.m. Eastern Time, and that could be a warm-up act for the big Friday government jobs report. The ADP report is expected to show 185,000 private sector jobs were created in June, while there are 179,000 jobs expected in the government's report on Friday. Later on this morning, trade balance data for May and the ISM manufacturing index for June are both scheduled before or at 10 a.m. There are also 3 Federal Reserve speakers today. They include San Francisco Fed President John Williams, who speaks at 3:45 p.m. Eastern Time in Hobart, Australia, at the Economic Society of Australia. Fed Governor Jerome Powell speaks at 10 a.m. at the American Enterprise Institute, and Vice Chairman Stanley Fischer speaks at 7:30 p.m. event at the Martha's Vineyard Hebrew Center Summer Institute on Government Policy and Labor Productivity. The future numbers there are all showing a negative sign. Dow Jones Industrial Average 0.10% down, S&P down 0.15%, and Nasdaq 0.29% down as at the last check. And in Asia, most markets there lost ground today, despite the mostly stronger close on Wall Street as oil prices rose but failed to recoup all of their overnight losses. Japan's Nikkei 225 fell 0.44%, while the KOSPI edged down 0.02% to close at 2,387.81. The Australian ASX 200 slipped by 0.08% as weakness in the heavily weighted financial sub-index was offset by gains in the healthcare sub-index. Hong Kong's Hang Seng index was off by 0.1%. Mainland stocks reversed losses to close higher. The Shanghai Composite rose 0.17% and the Shenzhen Composite gained 0.07%. Away from the markets, Malawi's central bank has cut the benchmark lending rate by 400 basis points to 18% as consumer price inflation slows. Malawi's consumer inflation slowed to 12.3% year-on-year in May from 14.6% in April. And South Africa's central bank says changing its shareholding will not affect its mandate hours after the ruling party proposed at a policy conference to nationalize the bank. According to the bank, even if its shareholding were to change, it would continue to drive its mandate from the constitution. The party's proposal is likely to raise concerns about the independence of the Reserve Bank after an anti-graft watchdog recommended its mandate be changed to place more focus on growth and not just inflation and the rand currency. Still in South Africa, the state power utility ESKOM has signed a $1.5 billion loan agreement with China Development Bank to finance the Medupi coal power plant. ESKOM's chief financial officer, Anuj Singh, says the Chinese loan will be paid back over 15 years. He expects ESKOM's debt to peak at 500 billion rand, up from 300 billion rand currently. And Rwanda's gross domestic product grew by 1.7% in the first quarter of 2017 compared with the same period in 2016. The services sector accounted for 46% of GDP, agriculture for another 32%, and the industrial sector another 15%. The Statistics Bureau says first quarter growth in 2016 had been revised from 7.3% to 8.9% without giving a reason. We'll take a quick break, and when we come back, we'll look at the commodities market. Do stay with us.